There's $21 billion sitting in accounts that nobody can touch. Not because it's been lost, not because someone forgot the password, but because two governments are playing the world's most expensive game of chicken, and the money is frozen in the middle. Welcome to the strangest economic standoff of the 21st century. Here's what most people don't know. The United States and Venezuela have been locked in a financial war for over 2 decades. Not with tanks or missiles, but with something far more surgical. Bank accounts, oil revenues, gold reserves, the tools of modern economic combat. And the battlefield? It's not in Caracas or Washington. It's in the abstract space where dollars, sanctions, and sovereign debt collide. This is a story about what happens when the world's largest economy decides to financially suffocate one of the most oil-rich nations on Earth, and why, despite all that pressure, the patient refuses to die. Let's start with the money. In 2019, the Trump administration imposed what's called secondary sanctions on Venezuela. These aren't your grandfather's trade restrictions. Secondary sanctions mean that if you're a bank, a company, or even another country, and you do business with Venezuela's government, you risk being cut off from the US financial system entirely. Think about that for a second. The US dollar is the global reserve currency. It's how international trade gets settled. If you're locked out of dollar transactions, you're essentially locked out of the world economy. So Venezuela's government found itself in a bind. It has oil, lots of it. The largest proven reserves on the planet, actually. More than Saudi Arabia, more than Russia. But oil is priced in dollars, sold in dollars. And when you can't access dollars, your oil becomes significantly harder to sell. The result? Venezuela's oil production collapsed from 3.5 million barrels per day in the late 1990s to under 400,000 by 2020. That's an 88% drop. But here's where it gets interesting. That money we mentioned at the beginning, the $21 billion, that's not Venezuelan government funds stuck in limbo. That's estimated value from frozen assets, locked oil revenues, and seized gold reserves held in banks from London to New York. The US strategy was economic asphyxiation. Cut off the money, starve the regime, wait for collapse. Except Venezuela didn't collapse. At least, not in the way anyone expected. To understand why, you need to understand how sanctions actually work in practice. Sanctions are supposed to be precision weapons. You freeze the assets of specific individuals. You block certain industries. You create economic pain that forces political change. Clean, targeted, surgical. But economies don't work like that. They're messy, interconnected organisms. When you choke off one part, the whole system convulses. Venezuela's GDP contracted by 75% between 2013 and 2020. 75%. That's worse than the Great Depression, worse than the collapse of the Soviet Union. It's one of the steepest economic declines in modern history for a country not at war. Inflation hit 130,000% in 2018. The believer became essentially worthless. People started weighing cash instead of counting it because the sacks were too thick. And here's the darkest irony. While the sanctions were designed to hurt the government, it was ordinary Venezuelans who bore the cost. Malnutrition rates tripled. Over 7 million people fled the country. That's a quarter of the population. Gone. The government, it adapted. This is where the story takes a turn into the absurd mechanics of survival. When you can't use dollars, you find alternatives. Venezuela turned to a patchwork of workarounds that reads like a spy novel. First, they started selling oil to countries willing to ignore US sanctions. China, Russia, Iran. These weren't charity cases. They negotiated brutal terms. Discounts of 30% or more below market price. Loans that came with strings attached. Second, they embraced cryptocurrency, not as a novelty, but as a lifeline. The Venezuelan government launched the Petro, a state-backed cryptocurrency supposedly tied to oil reserves. It was widely mocked, and it mostly failed. But it signaled something important. When you're locked out of the traditional financial system, you start building alternative rails. Third, and this is the really fascinating part, they went analog. Barter deals, swapping oil for food, medicine, and equipment, trading gold for euros through intermediaries. It's economic activity that leaves almost no paper trail, which is exactly the point. The US Treasury can freeze a bank account with a phone call, but it can't freeze a shipment of diesel fuel already at sea, heading to Cuba in exchange for doctors and teachers. This is 21st century sanctions evasion. High-tech and Stone Age at the same time. Now you might be thinking, if sanctions didn't work, why keep them? That's the question US policymakers have been wrestling with for years. Because the sanctions did work, in a sense. They devastated Venezuela's economy. They made life incredibly difficult for the Maduro government. But they didn't achieve the stated goal, regime change. And here's the uncomfortable math. The US has maintained these sanctions through 3 presidential administrations. Trump tightened them. Biden kept most of them in place with occasional tactical adjustments. The policy has bipartisan support, but the cost-benefit analysis is murky. Yes, you've damaged an adversarial government, but you've also created a humanitarian catastrophe, destabilized an entire region with refugee flows, and pushed Venezuela deeper into the arms of China and Russia. Meanwhile, American oil companies that once operated in Venezuela are shut out. ExxonMobil, Chevron, they had major investments there. Those are gone or frozen. The US essentially ceded one of the world's largest oil reserves to geopolitical rivals. There's a term for this in game theory, a Pyrrhic victory. You win, but the cost of winning might exceed the value of the prize. Let's zoom out for a moment and look at what this conflict reveals about the modern global economy. The US dollar's dominance is both a superpower and a vulnerability. It gives America enormous leverage. The ability to sanction is the ability to project power without firing a shot. But every time that power gets used aggressively, it gives other countries an incentive to build alternatives. China is already internationalizing the yuan. Russia has dramatically reduced its dollar holdings. Even European allies have discussed creating payment systems that bypass US oversight. Sanctions worked well when the US was the only game in town. But the world is multipolar now, and every frozen asset, every block transaction is a small advertisement for doing business outside the dollar system. Venezuela is a test case, not because it's powerful, but because it's survived. If a collapsing petrostate with hyperinflation and mass emigration can navigate around US financial pressure for a decade, what does that say about the strategy's long-term effectiveness? Here's where the story gets even stranger. In late 2022 and into 2023, the US started quietly relaxing some sanctions. Chevron was allowed to resume limited operations in Venezuela. The Biden administration began talks about easing restrictions in exchange for political concessions. Why? Because energy markets got tight. Russia invaded Ukraine. Oil prices spiked. Suddenly, Venezuela's oil didn't look quite so untouchable. This is the other side of economic warfare. It's never just about punishment. It's about leverage, timing, and self-interest. The US needs stable energy prices. Venezuela needs revenue. So the rules bend. But the fundamental dynamic hasn't changed. The sanctions infrastructure is still there. The frozen billions are still frozen. The tension is still live. And for Venezuela, the damage is done. Even if every sanction lifted tomorrow, it would take years, maybe decades, to rebuild oil production to previous levels. The infrastructure has decayed. The expertise has fled. The investment climate is toxic. This is the hidden cost of financial warfare. It's not just what gets destroyed in the moment. It's the future that gets erased. So what does this mean for the rest of us? If you're watching from outside this conflict, it might seem like a distant problem. Two countries fighting over oil and ideology. But the precedent matters. We live in an era where economic tools are replacing military ones. Sanctions, tariffs, asset freezes, these are the weapons of choice. They're sold as humane alternatives to war. No bombs, no casualties. Except that's not quite true. The casualties are just slower. Economic collapse kills through malnutrition, disease, collapsed healthcare systems. It's violence at a remove, executed through spreadsheets and banking protocols. And here's the uncomfortable question. Does it work? The evidence from Venezuela suggests that extreme economic pressure can destroy an economy without necessarily changing a government. It can create suffering without producing the desired political outcome. It can isolate a regime while making ordinary people desperate. That's not a policy failure in the traditional sense. The sanctions did what they were designed to do mechanically. But the theory of change, the idea that economic pain would lead to political transformation, that part didn't materialize. There's no clean ending to this story because it isn't over. Venezuela's economy remains fractured. Millions of people are still in exile. The government is still there, still defiant, still maneuvering. The US still has leverage, but seems increasingly uncertain about how or whether to use it. And that $21 billion? Still frozen, still waiting. It's a stalemate dressed up as a strategy. A conflict with no winners, only different degrees of losing. The real lesson isn't about Venezuela specifically. It's about what happens when financial power meets political stubbornness, when the world's most sophisticated economic tools crash against the messy reality of human systems that refuse to break the way you expect. You can freeze the money, you can block the transactions, you can isolate the economy, but you can't control what happens next. And maybe that's the most important thing to understand about economic warfare in the 21st century. It's precise in execution and completely unpredictable in outcome. The collision continues, the tug-of-war persists, and somewhere, in accounts scattered across the world, billions of dollars sit in limbo, waiting for a resolution that may never come.